market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Johanna in London and I'm in for Francine Lacqua today. Well, we're going to start off the show talking about some of those stimulus measures that came through from China yesterday. Big boost to markets. We saw a bit of a sugar rush, to quote some of my colleagues from opening trade. But this morning, some of that rally has started to fizzle out. I'm really happy to say that Johanna, Kyrklund, CIO and Global Head of Multi-Asset Investment at Schroders, joins me to discuss this and, of course, so many other things that are happening in markets right now. But maybe let's just start with your take on what we got out of China yesterday. Big stimulus package. We saw some positive reaction in global stock markets. Is it going to be sustained?
I think that it's certainly helpful to the Chinese stock market in particular, a very wide range of measures that they took on the monetary side. I think ultimately, in order to have a more positive impact on markets globally and, for the Chinese economy, we need to see more fiscal stimulus as well. And maybe that's on the way soon as well. But I would say necessary but not sufficient condition for recovery in China.
To what extent do you think, obviously we will talk about the US and Fed and the interest rate decision there, but to what extent do you think China is also going to be a driver for these global stock markets and performance from here? How important is it really for the trajectory of travel?
Well, I think that it's clearly been a headwind for Germany, for example, because Germany obviously relies on it as a crucial export market. So it is already having an impact, I think, particularly on the some of the European stock markets. Anybody who's exporting to China has been suffering as a result of weakness in China. So absolutely continues to be a key driver of markets globally.
Let's switch over and talk about the U.S. The Fed opted for a 50 basis point cut. Some people read that as perhaps a sign that the data is really going to start deteriorating in coming months. And other people are saying, well, anyway, they had to cut because we're coming from such a restrictive level. How do you see it?
I guess we're in the latter camp. For us, this is normalization rather than stimulation. They were running policy tight. I think they judged with inflation moving in the right direction that they could afford to start moving to neutral. So certainly I wouldn't see it as an indication or I wouldn't take it as a need to panic on growth. I think it's more a recalibration of policy reflecting the fact that they have more room for manoeuvre now that inflation's come down. And they're really focusing on that dual mandate, not just inflation, but also full employment.
Yeah, what I think is interesting about the U.S. is we're getting all of these data points coming through. Yesterday, the U.S. consumer confidence data surprised at the downside, and yet tracking GDP, and I recently looked at the Atlanta GDP tracker, still 2.9%. We are no way near recession levels. So is there any possibility at all that the data deteriorates so rapidly that we actually do end up in a hard landing situation?
Well, right now we don't see evidence of that in the sense that, yes, the employment market's softening, but it's still pretty strong. That ultimately consumers in good shape and the corporate sector in particular is also in strong shape. So credit markets have been performing very well. So right now we don't put a high probability of a hard landing in the United States in 2025. So for us, as I said, this is a recalibration of policy. It's helpful. Yeah. It's good that the Fed is so focused on its dual mandate. That's quite helpful to markets.
I see you're underweight fixed income. Where do you see as fair value for 10-year treasuries?
Well, I think that actually that was more of a tactical position going into the Fed. I think one thing that we've been observing is that this market tendency to price very aggressive Fed pivots. I think they tend to be, we've seen a few goes at this. And that was really, that's why we were a bit underweight duration. And, we sort of managed to get a bit of profit out of that as we went through the FOMC. Generally, we have to recognise that we are slowing, so the environment is more supportive of fixed income. As I said, we're a bit concerned again about the aggressiveness of the pivot that's priced into markets at the front end.
There's certainly a lot priced in, 200 basis points by the end of 2025.
Yeah.
Let's round up the discussion talking about Europe. It feels as though the last couple of days have been quite pivotal in terms of market expectations of how the economy is doing. Those PMI numbers were a bit of a negative shock on Monday. Traders now pricing in, say, more than 60% chance of the ECB actually cutting rates in October. Do you think they will cut rates, and should they be cutting rates?
We think they should be cutting rates. They obviously have to keep an eye on inflation. They, again, have a different mandate to the Fed, less of a dual mandate, more focus on price stability. But I think there is room for manoeuvre here to cut rates in Europe, so that would be our expectation.
How are you viewing the investment opportunities in Europe, though? Because there do seem to be so many headwinds out there, be it from the auto industry, from the linkages to China, the potential tariffs on some of these EV makers, the slowdown in Germany, some of the banking stories that we've been talking about as well. Where do you see the opportunities?
I think it is still quite a challenging environment for Europe, as you say, particularly Germany is being sort of caught in the sort of wrong end of a number of trends. You know, it used to rely on cheap Russian energy. It was exporting to China. So that combination is pretty difficult. So I think that there's still some challenges for Europe. I think we are starting to see some evidence of changes, though. For example, potential for cross-border consolidation. I think that is something that could be happening. So in general, I'd say from the bottom up, there's still opportunities. But as a top-down market, still very reliant on global growth, which means that typically we're favouring other markets rather than Europe.
And how are you viewing the UK in all of this? So we're going to be touching on Keir Starmer's speech later on in the show, but is there anything that stood out to you from that? Is there room for more optimism relatively looking at the UK economy?
Well, it's been interesting. This year, the UK has done pretty well. I mean, particularly when you compare it to other European markets, one of the best performing markets in the region. And I think that it benefits from a number of things. Firstly, what has held it back in recent years, you know, the complete absence of tech, a very old economy index. It's started to pay off now in a more value-driven environment. And generally, again, having had years of political instability compared to other countries in Europe, we're in a relatively more stable place. I guess we had the sort of vaccination of the gilts crisis as well, which led to maybe more fiscally responsible policies here in the UK. So generally, I think the UK does look interesting. It continues to look cheap. And certainly there are opportunities here. Yeah,
well, that's a good place to leave it. Thank you so much for joining us today on The Pulse. That was Johanna Kyrklund, CIO and Global Head of Multi-Asset Investment at Schroders. Thank you. Well, coming up, Israel intercepts a missile heading towards Tel Aviv. Hezbollah says it was fired at Mossad headquarters. We'll have the details next. This is Bloomberg. Welcome back. Hezbollah says a ballistic missile fired towards Tel Aviv was aimed at Mossad headquarters. It follows days of intense Israeli airstrikes in southern Lebanon, in which more than 500 people have been killed. In his first address to the UN General Assembly, Iran's president accused Israel's allies of hypocrisy.
The responsibility for all consequences will be borne by those governments who have thwarted all global efforts to end this horrific catastrophe and have the audacity to call themselves champions of human rights.
Well, in a short moment, we are going to be bringing in our colleagues, Bloomberg's Paul Wallace in Dubai and Mark Champion, international affairs columnist at Bloomberg Opinion. In fact, they both join us right now. Paul, let's just start with you. Bring us up to speed on all of the events over the last 24 hours, ongoing airstrikes. This morning, we're hearing of a missile that was intercepted, directed at Tel Aviv. Bring us the latest.
Yes, these attacks by both Hezbollah and Israel are continuing in a very aggressive style. That missile you mentioned that was aimed at Tel Aviv, Hezbollah says it was aimed at Mossad's headquarters in the city suburbs. It's actually the first time the Israeli military is saying that Hezbollah has fired a missile at Israel's commercial capital. So I think that just underscores what a dangerous point we're at. Israel is continuing to hit southern Lebanon and other parts of the country today, and it's implying that there will be no let-up. I think it's quite clear now that Israel is very much intent on carrying on this bombardment until it sees signals that Hezbollah is willing to move its fighters away from the border area.
Yeah. Mark, let me put this question to you. On Friday, you penciled an article which was quite interesting. You said Israel's plans for Hezbollah are becoming clear, where you make the case for a ground invasion not being imminent, saying that the aim appears to restore deterrence and degrade Hezbollah to the point where it is incapable of continuing with rocket and missile attacks into Israel. But of course, today, you're seeing a very defiant Hezbollah, and even yesterday, Israeli military was saying that Hezbollah fired over 300 rockets into northern Israel. So there doesn't appear to be signs of Hezbollah backing down. Does this make a ground invasion more likely?
It does. I mean, the other thing I said in that piece is that, the flaw in the Israeli plan is that, as so often in these cases, the other side gets a vote and tends not to do, what it is that you're trying to, you want them to. So that is sort of what's playing out now, and you can describe this entire operation really as a very successful shaping operation, which gives the Israelis the would lay the ground for a potential ground invasion if they want to go that way.
Yeah.
I still don't believe that it's something that they want to do simply because they've tried this before and it's been very painful.
Yeah, well, so let's talk about them trying it before. The last direct war between Israel and Hezbollah happened in 2006. It lasted 34 days. But at the end of it, a resolution was passed called the UN Resolution 1701 that stipulated that Hezbollah have to lay down their arms and retreat from the border. Of course, that did not happen. Hezbollah has not respected that resolution. What would change the catalyst this time around for a resolution like that to actually be adhered to and implemented?
Well, it would be the fact that Hezbollah felt that it was had to move back. So either because it's persuaded to, because it is suffering so much damage. Even with the missile that was fired at Tel Aviv today, that missile was shot down, whereas the Israelis are acting with impunity over Lebanon, which gives you an idea of the kind of the difference in the technological strength of the two sides. But so either they would have to back down, or as a result of a ground invasion, they would be driven out. And the Israelis have occupied southern Lebanon before for 18 years. So they know what's involved, and they know how sticky that can be and how unsatisfying.
Now, Paul, while all of this is taking place, there is the UN General Assembly also happening in New York, and many people were watching out to hear from the Iranian president yesterday, Mr. Pezeshkian, first time addressing the UN General Assembly. But again, interesting comments there. He was saying it is imperative the international community should immediately stop the violence and bring about a permanent ceasefire in Gaza. It sounds as though Iran are washing their hands, from the situation that's happening in Lebanon, even though Hezbollah is very much Iran-backed.
Yes, I think so. As you've noted, it's very much Iran-backed. And not only that, it is the most important of Iran's proxy militia groups in the Middle East. Some people say it's Iran's first line of defense against attacks or potential attacks by Israel. So if this escalates and it comes to a point where Hezbollah's existence as a military force is in question, then a lot of people think Iran would have to act, or at least a lot of elements within the Iranian military and government would see it that way, that they just could not let Hezbollah be defeated as a military force. As you noted, those comments at the UN General Assembly from Iran's new president, Masoud Pezeshkian, sort of underscore how Iran really doesn't want to get involved in any kind of deep conflict with Israel or the US right now. And Pezeshkian has been saying since he got elected a few months ago that he wants to improve relations with the West to try and get sanctions eased. So I think from his point of view, he certainly doesn't want to get involved. But as I said, if it comes to that, there will be a lot of people within the Iranian government and military saying we have to save Hezbollah. We simply cannot let it be sort of smashed to smithereens.
Yeah. And Paul, attention now moves on to the Israeli Prime Minister Benjamin Netanyahu's speech. He is scheduled to give a speech on Friday. What are we expecting out of the Prime Minister?
Well, he's delayed his trip because of these hostilities with Hezbollah, and he's going to be on the ground for a much shorter period than he initially hoped. I think just 36 hours now, according to his latest schedule. He is most likely going to talk about Iran, as he keeps doing in his public speeches of late, and emphasizing to a world audience and an American audience how Iran is an evil force as he and his government see it, and they're essentially trying to surround Israel with these proxy groups to eventually launch more October the 7th style attacks on the country. I think he's also going to try and shore up support for Israel as this campaign against Hezbollah continues, because as Mark has mentioned, there are a huge number of fatalities in Lebanon so far. That is of huge concern to many world powers. So I think he's going to try and just say Israel is doing this because it has no choice.
Bloomberg's Paul Wallace and Mark Champion from Bloomberg Opinion, thank you so much for joining the show today. Well, coming up, tech firms, including German giant SAP, are currently being investigated by U.S. officials for potential price fixing. That story is next. This is Bloomberg. SAP shares have fallen the most since early August after Bloomberg reported that the software maker is amongst the companies being investigated by the U.S. for potentially conspiring to overcharge government agencies. Let's get the details with Bloomberg's Karen Matusik, keeping a close eye on how the stock is trading this morning, down 4%. How did this all come to light?
It came to light more or less by accident because there was, in a court docket in Baltimore, there was a filing in a case between the U.S. government and Carahsoft, a software reseller which is also being probed. They received a subpoena at some point to produce some documents, and apparently, at least in the eyes of the government, they didn't fully comply with it. They didn't hand over the documents that were requested. So the government started this litigation, and in those court documents, even though some of them were redacted, there's the probe against SAP and the others is being lined out there. That's how we know it.
I mean, so far it's been a pretty strong start to the year for SAP. The stock is up more than 40%. Obviously, this morning we are ticking lower, down 4%. But when you look ahead, how big are the risks for SAP?
Well, you know, being in trouble with the U.S. government is really isn't fun, and a lot of German companies have experienced that. Remember VW, the big thing about the diesel scam, and for those people who are around for a long time, Siemens is another example. That's almost 20 years ago, but they can levy hefty fines. I mean, we don't have enough information how likely such a fine is at the moment, but the U.S. can impose in this price regulating cases can impose 3 times the damage they actually had. So that could, you know, depending on how much sales are being covered here, that could be a hefty sum. And of course, investors are concerned, especially as they don't know how big the extent is. And SAP hasn't yet commented on anything here.
Well, certainly an important one to watch, given its outperformance versus the rest of the market this year. Bloomberg's Karen Matusik in Berlin. Thank you so much. Well, Caroline Ellison has been sentenced to 2 years in prison by a federal judge for her role in the collapse of FTX. Ellison was previously a top executive at the firm and admitted charges of wire fraud. She also testified against founder Sam Bankman-Fried and was ordered to forfeit more than $11 billion. And coming up on the show, Beijing says it opposes a possible U.S. ban on Chinese car software amid a wider row on tariffs. We'll discuss Europe's car market with the Director General of the European Automobile Manufacturers Association. That is next. This is Bloomberg. Good morning and welcome to The Pulse. I'm Johanna in for Francine Lacqua in London, and these are your top stories. European stocks dip while Asian shares pared some of their earlier gains as investors mull the sustainability of China's rally. Middle East tensions ratchet up as Hezbollah fires a missile on Tel Aviv, while Iran's president tells the UN General Assembly that Israel's attacks on Lebanon will not go unanswered. Plus, SAP slumps as Europe's largest software company is investigated for potentially overcharging the U.S. government. The CEO of UniCredit has said he doesn't want a seat on the board of Commerzbank despite increasing his stake in the German lender.
We are an investor Okay. Number one, I usually do not believe in investor having board seats. And in this specific case, I think it's inappropriate for us to have a board seat because we're also a competitor. I don't think that that's correct.
Ongoing story in the European banking space, but Andrea Orcel has been sharply criticized by Germany for the way UniCredit has gone about acquiring its holding. Bloomberg's Oliver Crook joins us from Berlin. First of all, we just got these comments from Andrea Orcel just a short while ago. What do you make of what he had to say vis-a-vis saying we are investors, it's inappropriate for us to have a board seat because we're also a competitor?
Yeah, Johanna, it's really interesting. Obviously, everything that Andrea Orcel is going to say in this period of time is going to be closely watched by shareholders, by everybody in banking, by the government. And so for him to say that, I think it's interesting because he made a couple other comments. And I think what is really interesting here, Johanna, is what he kept talking about in this conference at the Bank of America conference. He was talking about how profitable UniCredit is, right? He was talking about how they're actually going to boost their dividend payouts from 50% to 40%. And if you're a shareholder in Commerzbank and trying to make money, take a look at what you've got on screen here, the return on common equity of UniCredit versus Commerzbank. If you have sort of Andrea Orcel as a CEO, look at how much more money you are getting back as an investor if you are an investor there. And throughout this whole discussion, Johanna, we've talked a lot about how the German unions have reacted, how the German government has reacted. We know a lot less about how the other shareholders of Commerzbank feels about this. And of course, they're going to play a critical role in this. Yes, the German government can hold on to their stake there, but it sounds a little bit to me, Johanna, like he's speaking directly to shareholders and saying, listen, if you want to make money, you know where this bank should be.
Yeah. What about from Commerzbank's perspective? They've announced a new CEO. Obviously, that is the current CFO, Bettina Orlopp. Is that going to make a difference at all? Is there anything that Commerzbank can attempt to do to fend off this prospective bid by UniCredit?
Yeah, I think fundamentally it does make a huge difference, in part because you can't go into a war or a battle without a general. And basically we had the outgoing CEO the day before all this sort of news broke that UniCredit was making this move on Commerzbank. He had said he did not want to renew his contract. So we were in a position here where you need to have strong leadership at the top of Commerzbank so that you can deal with whatever comes, and you need to be able to present your vision for what the future of this bank is. And it needs to, by the way, for shareholders to be a better vision than what is being proposed by Andrea Orcel. So what you have now is Bettina Orlopp, the former CFO or the current CFO, now outgoing, who has been CFO since 2020. She's been at Commerzbank since 2014, and she is going to be taking on that role. And it's going to be coming at a very challenging time, Johanna. You know, they say that the strongest steel is forged in the hottest fire, and that is certainly the fire that Bettina Orlopp is coming into right now.
Absolutely. Bloomberg's Oliver Crook in Berlin, thank you for bringing us the latest on that story. It's certainly not going away anytime soon. Well, Volkswagen has started negotiations with unions over possible job cuts. Tensions have been rising since the car maker said it was considering closing a number of factories. Analysts at Jefferies reckon VW is looking to cut around 15,000 jobs globally. And China says it opposes proposed U.S. restrictions on Chinese car software, calling the plans, quote, economic coercion. This as sources say the EU and China have agreed to continue negotiations on tariffs, even if member states vote to impose levies on EVs. One Chinese electric vehicle maker, NIO, has weighed in on the debate, saying moves to levy tariffs on EVs are unreasonable. So for more on the European car market, we're joined by Sigrid de Vries, Director General of the European Automobile Manufacturers Association. Thanks so much for joining us this morning. Let's just start with an overview of the sector, because clearly the European automaker industry is in a state of malaise. You hear warnings from various automakers on margins, on sales, on some of the declining profitability of their electric vehicles units. What do you think is going on here? Why are we seeing this downward pull in the European automobile industry?
I think there's a number of things colliding. So we're still, in terms of volumes, production, around 20% below levels of the pre-pandemic period. So we're missing more than 2 million vehicles in the market, in the factories as well. So that creates a lot of tension, and on top of that, the war in Ukraine, also price of the cost of living crisis in a number of member states, high energy costs, high competition. I mean, it's all coming together at the same time. We sometimes call it the almost perfect storm happening together, and we need to deal with that. And I think now also with the green transition moving from paper to reality starts to hit, and we see how difficult it is to not just have mandates, regulatory mandates, and models on the market, manufacturers making cars, but also needing a market to pull. And that's what we are missing at the moment in Europe.
Yeah, there are fears over the shutting of more factories, and indeed we heard from VW today. What can be done to prevent that from happening? Is it your expectation that more factories are going to be shut? And certainly, what sort of a role do you think the German government has to play here? The economy minister has talked about doing something potentially to help stabilize the industry.
Absolutely. I think it's crucial that these talks take place at member state government level, but also here in Brussels, the European Commission and the other institutions. And I think it shows that them taking this issue so seriously, that there is real growing acknowledgement of the problems, the issues that we face as an industry. And it's predominantly about making this transformation to green mobility, electrification, where you do not just need to change from one to another technology, but you really need to make this mindset shift with consumers being able to use these vehicles. So you need the charging infrastructure, you need the cheap and green energy. You also need the whole value chain to be ready in Europe and to being able to also deliver at a profitable level, competitive level. So, and that brings me to the regulatory framework that then also comes into play and needs to really fit well. And all these dimensions ideally be synchronized, which they aren't at the moment. And you see that in any transformation. I think no one expected this ever to be, a smooth ride or a straightforward transition. But as I said, reality is really starting to hit. And we see where governments, institutions may need to take some action to make this a smoother ride. And there is a lot at stake.
Yeah. Well, I know that you are seeking a relief package on those 2025 CO2 targets. How are discussions progressing there?
Well, at the moment, we're having lots of talks. We're informing policymakers about what the issue is, what the concerns are, what the background to these concerns is. So we're doing a lot of explaining. People have a lot of questions, and understandably so. So that's where we are. And of course, then we're also gauging the sentiment, the atmosphere. But there is a lot of recognition. We really see they take it very seriously. There is an understanding that things need to work better together. We want this transformation to work as industry, and we are delivering with models coming into the market. But the other dimensions of this transformation are really not delivering at the same pace and at the scale that they need to be.
Yeah. Let's talk about tariffs. There are ongoing discussions as we speak right now between China and the EU about the possible proposal out of EU member states to start imposing tariffs of up to 50% on some Chinese EVs. If that does actually pass, would that be a tailwind? Would that provide an opportunity for European automakers simply because there'll be less competition?
Yeah, as I say, we don't really take a position on this actual case. What I will say, though, is that for the auto industry, a fair, free global trade is tremendously important. And so are good and stable relations with China. It's an illusion to think that we can decouple from China. We need the materials, the components, also the technology, but the Chinese also need us when it comes to auto manufacturing and making advancements there. We also need a level playing field. So if there were to be any distortions, and we of course trust the Commission makes a very thorough investigation, then measures can be taken as well. But I mean, this is such an important illustration again of the changing world where competition is growing, where new dependencies are created and also need to be managed in terms of risks and supply chains. And I think most importantly, and this also came from Mario Draghi's report on the competitiveness of the EU, is that the EU needs to be able to be strategically autonomous, resilient, competitive, flexible, and all of that. And that's where the EU needs to do a lot of catching up. And the EU industry, being one of the most important industries in Europe, is, I think, at the front line of this whole transformation.
Okay, in light of everything that we discussed and given some of the headwinds on the rollout of electric vehicles, do you think that automakers will have to change the timeline of how quickly they're going to move away from combustion cars, ICEs, simply because the demand isn't there for EVs?
Well, the law is the law, so you need to meet your targets. But in the end, it's consumers, customers buying the vehicles, needing to take their wallet out and making that purchase. And they need the confidence in using these vehicles across Europe in this case. I mean, in some member states, it works really well. They are advanced with charging infrastructure. They've delivered on purchasing and other fiscal incentives. But there are many EU member states where that isn't the case. So you see a lot of diversity in terms of where member states are, whereas manufacturers are faced with sales targets, averages across Europe. So they will need to make adjustments. They will need to really feel what the consumer wants. And that is their main preoccupation in a way. But at the same time, they also need to meet regulatory targets. And that's exactly, I think, where we need to talk with legislators. The direction of travel is very clear towards decarbonized mobility and electrification being the predominant technology. But we also need the other enabling conditions to be in place to make that transition work.
Right. Well, thank you so much for your time today. Really interesting to talk to you. That was Sigrid de Vries, Director General of the ACEA. And coming up, Keir Starmer says he's ready to take tough decisions that will make him unpopular. But has the UK PM overdone the doom and gloom? We'll discuss that next. This is Bloomberg. UK Prime Minister Keir Starmer says he is ready to take tough decisions that will make him unpopular as his government looks to tackle challenges facing the economy. He told his party's annual conference his programme remains unchanged despite a slew of setbacks early in his premiership.
That if we take tough long-term decisions now, if we stick to the driving purpose behind everything we do, higher economic growth, so living standards rise in every community, our NHS facing the future, waiting lists at your hospital down, safer streets in your community, stronger borders, more opportunities for your children, clean British energy powering your home, then that light at the end of this tunnel, that Britain that belongs to you, we get there much more quickly.
Well, let's get more from Bloomberg's Lizzie Burden, who is in Liverpool. Lizzie, well, it was a one-hour speech. What was the reaction to his speech yesterday?
Johanna, it was raucous in the room, but I guess that's not really what matters. It's what's outside this arena that really counts. So this was Keir Starmer's first speech as Prime Minister. And of course, after that victory, you would have so much applause in the arena. There was a lot of lofty rhetoric, a repeated reference to the Labour way. He said he's not going to give anyone false hope. So clearly a contrast to Boris Johnson's boosterism. And indeed, a lot of the speech devoted to the Conservatives, looking backwards rather than to explaining the Labour present and what's to come in the future policy-wise. But look, that doom and gloom narrative is really already weighing on consumer confidence. It's weighing on the polls. Ipsos saying 6 out of 10 Britons aren't happy with this government. And I think it's notable that Keir Starmer has already packed his bags and gone to New York for the UN General Assembly meeting. That's earlier than is usual for a leader at Labour conference. And perhaps it shows that he's got an easier ride on the international stage than he does on the domestic one. He looks like he's open to meetings with Kamala Harris and Donald Trump.
Let's just bring it back to domestic policies. And I'm curious to hear whether the messaging we heard yesterday is in line or mirrors the messaging that we heard from the rest of the cabinet as well. Are they being consistent with their messaging here?
Yeah, they did echo the recognition that it had been a bumpy start to the Labour rule. Take a listen.
in any government, it's a big shift from opposition into power. You'd imagine a little grinding of the gears isn't unusual.
From the budget in October through to the spring in 2025, those stable foundations on policy and public spending will be set for the rest of this term in office, and we will not return to the behaviour we had under the last Conservative government.
Whenever you have a budget and when you have, if we're being frank, a dire fiscal inheritance in terms of what we have been bequeathed by the previous government, you will get budget speculation.
So you heard there from the Environment Secretary, Steve Reid, kind of acknowledging that there have been stories about infighting at number 10 Downing Street and freebies, but that's normal, he says, for a government that's transitioning from opposition to power. You heard from the Business Secretary, Jonathan Reynolds, there saying that speculation before a budget is normal as well. And Darren Jones explaining that some of Keir Starmer's tough long-term decisions, as the Prime Minister would put it, are going to apply to this £22 billion fiscal black hole that they need to fill. But what it really underscores is that if you leave a policy vacuum, as they have, the newspapers are going to fill it with negative headlines, and the speculation is frustrating to business. I spoke to Johnny Reynolds about tax rises potentially in the budget and whether that's going to drive away wealth creators. He says that's too dramatic. But actually, we've had a fantastic big take on the terminal. I recommend a read of it about people in private equity who are looking to flee Britain because of these potential moves. A survey by S&P Global says that businesses are putting off investments because they're nervous about the details in the budget. But there isn't a lot of detail here to give you from Liverpool, Johanna.
Yeah, well, good tease for the big take. In case you didn't catch that, you should definitely check out the big take on the terminal. Thanks to Bloomberg anchor and UK correspondent Lizzie Burden. Well, coming up, another headache for Boeing. The company's offer of a 30% wage hike is firmly rejected by thousands of striking workers. We have the latest. This is Bloomberg.
I've been pointing out when it comes to the climate, every time I talk about it, whether I was trying to convince labor or business to come along, I'd say, when I think climate, I think jobs. I think jobs, and I mean it. Good union-paying jobs. In fact, I'm proud to have kept my commitment to bring unions and business to the climate table. That's what we're seeing.
We made a commitment about running our data centers 24/7 on carbon-free energy, and there are a number of components to that. We're continuing to invest in renewable solutions around the globe, but I also want to say that one of the very important parts, we, like others, are investing substantially to improve the efficiency of compute, and you're seeing it in two places. You're seeing it in the chip side, hardware, and you're seeing it in models.
President Biden there and Ruth Porat, President and Chief International Officer at Google, both speaking at the Bloomberg Philanthropies Earthshot Prize and Global Business Forum in New York. Well, the union representing 33,000 Boeing workers on strike have rejected the company's latest proposal to hike wages by 30%, describing it as inadequate and disrespectful. The standoff comes with Boeing stock under pressure, having tumbled around 40% this year, the second worst performer on the Dow Jones. So let's bring in Bloomberg senior aviation reporter Sid Phillip. Good to have you with us on the show. We've been tracking the story very closely. The offer put forward by Boeing has been rejected once again. What are the key issues here?
Morning, Johanna. So the biggest issue for the workers has been the fact that Boeing went to the workers directly. In the latest offer, they went directly to the workers instead of going through the union. And that's been a big problem for the union. And the union termed that disrespectful. And they also came back and said the workers were not ready. They did a survey of the workers, and the workers were not ready to accept the latest offer of 30%. So they've said that they're willing to go back into negotiations, mediated or otherwise, directly with Boeing. But they've said that this offer is not going to stand.
Yeah, I mean, it just seems to be another cloud hanging over Boeing. The walkout started on September the 13th. It's ongoing. How much of an issue is this actually posing for Boeing?
It's a huge issue because for Boeing, their biggest cash cow is the 737 MAX, which is built in the Seattle area, along with the 767 and the 777. And so unless they're able to actually deliver aircraft, they aren't going to get cash. And for Boeing, they've been bleeding cash. They've burned through $8 billion of cash in the first half of the year.
Wow.
And they are burning through cash as they sort of aren't able to deliver planes.
So stock is down 40%. They can't deliver planes. There is a new CEO in town. How's he going to turn things around?
Yeah, so for the new CEO, the biggest challenge is trying to get this sort of strike resolved and then get plane deliveries back on track, which will bring in vital cash for the company. And, I mean, they can then start chipping away at their massive debt pile. Because, I mean, they've also been threatened with a downgrade by the rating agencies as well.
Yeah.
So lots of problems for Boeing's, and they really need to be able to get their production back again and then start delivering aircraft in order for them to actually be able to get through this.
And you've got to think that resolving this walk-off is going to be a top priority for
Absolutely.
management. Yeah. Sid, thank you so much. That was a Bloomberg senior aviation reporter, Sid Phillip. Well, a quick look at European markets before we head out, because some of the positivity that we saw yesterday in reaction to the China stimulus package has started to be unwound. And there you have it in front of you. These indices are slipping into red as we head into the U.S. session. So the DAX is down 0.5%. CAC 40 also down a similar amount. The relative outperformer, though, is the FTSE in the UK, up about 0.8% today. But up next, Bloomberg Brief with Danny Berger in London today and Manus Krani in New York. This is Bloomberg.